I wanted to take a second to go over the fourth quarter 2021 earnings for one of my favorite solar companies, Canadian Solar. Brought this company up a couple times in the past. They missed their earnings and revenue expectations that Wall Street had very, very narrowly, but that still puts negative pressure on the stock as far as the price of the stock is concerned. But the business is doing very good. In fact, we'll just go through it here. So for the fourth quarter, they shipped 3.8 gigawatts of solar modules, which was in their range of 3.7 to 3.9. So there's no loss of production. 47% increase in revenue year over year, and it was 1.53 billion, which was in line of what they expected. And they had a gross margin of 19.7%, which exceeded their guidance range. And they had net income of 26 million or 0.39 cents per diluted share. However, and we'll go on to see that they had other expenses that, this is on a GAAP basis right here, this 39 cents. And strangely enough, on a non-GAAP basis, I believe they reported closer to a 14 cents per share. And that's the number that will get ran into the when factoring their PE ratio. That's a number that you see used in like Market Watch or Yahoo Finance. So that is a drag on the company. There's a 28% year-over-year growth in total module shipments of 14.5 gigawatts. 52% increase in revenue year-over-year. The net income attributable to Canadian Solar was just about $100 million or 1.46 cents per diluted share, and that's for the entire year. And the most interesting thing, Canadian Solar just last year, just in 2021, started producing, shipping, and installing their battery storage solutions for the power plants that they operate. They build out and operate solar power plants, or in the case of an Italian utility company, leased out their solar farm that they had built for Canadian Solar to maintain it. But anyway, just last year they started to deploy battery storage, and they've already deployed 896 megawatt hours, and this is their PowerPoint. Here's what they produced. Let's see, 2020, zero megawatt hours, and then here in 2021, just about 900 megawatt hours. And next year, they're expected to over 2x produce 1.8 to 1.9 gigawatt hours. And if they're in the business of building out and operating and maintaining solar farms and selling the energy that they produce, adding battery storage thus extends the amount of time during the day that they can supply energy to their customers. If they're building out and operating these solar farms, you can only sell energy during the day. As soon as the sun starts going down and all throughout the night, you're not making any money. But with these batteries, if they start installing these at their solar farms, however long the battery lasts, you can sell energy all throughout the night. So that was very exciting. 2.1 gigawatt peak in projects monetized by the global energy segment. So currently, you have Canadian Solar, you have a subsidiary which is CSI Solar, and Global Energy, which is their division that owns and operates the solar plants. They have 2.1 gigawatt peak in projects monetized, including 350 megawatts and 1,400 megawatt hour battery storage. global energy solar project pipeline of 24 gigawatts peak and storage pipeline of 27 gigawatt hour as of January 2022. So where it says pipeline of 24 gigawatts peak and storage pipeline of 27 gigawatt hours as of January 2022. That sounds a lot better than it actually is. So the pipeline is different opportunities that are available and operations that Canadian Solar could potentially be awarded and have the ability to install and enact. However, they'd probably be awarded 10% of that. 10% of that, probably be awarded 10% of that. So, 2.7 gigawatts hour for 2022 or 2.4 gigawatt peak as far as projects go. So anytime you see pipeline, expect, what the company would like to be awarded and be contracted. Whenever you see back order, that is actual contracts that the company has and is expected to finish or at least begin production for that year. And then actual shipments, another thing. Also for 2021, they carved out the IPO of CSI Solar. So that is their subsidiary. Last year they actually IPO'd CSI Solar. Let's see what else. All right, so total module shipments for the fourth quarter of 2021 were 3.83 gigawatts, which is a 28% year-over-year increase and a 1% quarter-over-quarter decrease. And they consumed 263 megawatts of their own panels. So that I would believe would be a loss. They, for accounting purposes, they still would transfer the money. However, it's internal, so there's no additional, actual recognized revenue there. Net revenues in the fourth quarter increased 24% quarter over quarter and 47% year over year. I'd be more interested in seeing the net income. And gross profit was up 32% quarter over quarter and 114% year over year. Gross profit, I'd like to see net profit. The fourth quarter benefited from U.S. anti-dumping and countervailing duty true-up. Gross margin without that would have been 18% instead of 19.7%. So 1.7% gross margin can be attributed to the AD/CVD true-up benefit, which would be $26 million. And that we had a video that covered that a little while ago. The judge was like Greg Katzman, who argued that Trump, whenever he was in office, his administration, during the Chinese tariff battle, one of the tariffs imposed was on solar dumping, and this anti-dumping countervailing duty true-up benefit was a reversal of one of those tariffs, which impacted double-sided solar panels. So this federal judge, he ruled that tariff was too far-reaching and would no longer be enforced. So you start to see these solar companies put this AD/CVD true-up benefit on their earnings reports. So they were expecting to lose this $26 million, but instead they get to pocket it. Total operating expenses were $234 million compared to $176 million in the third quarter of 2021 and $139 million in the fourth quarter of 2020. So of course, as time goes on, companies get bigger. As we saw, um, Canadian Solar, they did ship more modules, although it was only actually they shipped less quarter over quarter. So they spent, what was it, 176 in the third quarter and 234 million in the fourth quarter, even though they shipped 1% less modules. So that can kind of tell you, even though the revenue beat expectations as we saw previously in the report, and the solar module shipment was in line with guidance, they still they still missed on their net income. And that would just be due to increased expenses. So the problem isn't necessarily increased expenses, because solar energy is one of the cheapest forms of energy. So they still are far cheaper and more convenient than natural gas, coal, or oil power plants, energy generation. However, it's the acceleration of the increase in shipping and other goods that have a negative impact on the company, because as prices increase, they will adjust and sell their product at the market price. So they'll track inflation, they'll track energy costs, shipping costs, they'll track all of that, and they'll make adjustments. And so next quarter, you'll see higher panel costs or whatever. But if costs continue to increase, then those new prices will be too cheap. And so they will incur even higher operating costs or lower margins. And so, once the costs start to level off and plateau, and you stop seeing these increases in operating expenses, then the gross margin will start to increase, and the gross margin will stop increasing. No, I'm sorry. Yeah, the gross margin will then start to increase, and the net income will follow suit. But we need the acceleration of price changes to slow down. Non-cash depreciation, not too interested. Income tax expense. Net income attributable to Canadian Solar in the fourth quarter of 2021 was 26 million, or 39 cents per diluted share, compared to net income of 35 million, or 52% diluted share in third quarter of 2021. Yeah, so that's going to be due to the acceleration of prices and operating expenses. Okay, here we go. On a non-GAAP basis, net income attributable to Canadian Solar in the fourth quarter of 2021 was 10 million, or 17 cents per diluted share. And at the top, this number, 26 million, or 39 cents per diluted share, that is their GAAP net income, which is a more stringent way of reporting your finances, which is why it's a little confusing that they're non-GAAP. Let's see, that was here. Here we go. So on a non-GAAP basis, they earned $10 million. So, and that non-GAAP excludes the $16 million AD/CVD true-up benefit, and also net of income tax effect. And okay, so that's why GAAP would have them include their net of income tax effect and the AD/CVD true-up benefit. So technically, they do benefit from this money here, which here we have 26 million that they got from AD/CVD true-up benefit, but here they're saying 26 million, which if this was 10 million and this up here was 26 million. Yeah, so that would be 16. Okay. So on the non-GAAP, they're not counting that 16 million. But like I'm saying, if you go to like Yahoo Finance or any of the financial sites, they are tracking this 17 cents per diluted share, making their earnings look worse. I'm not sure why that is. Maybe they can't recognize this benefit immediately. I am not too sure. And they increased shares in 2021 with the issuance of 3.6 million shares. 1 million of which were issued in the fourth quarter. And it includes a dilutive effect of $230 million aggregate principal amount of convertible notes issued in 2020. Okay. And that's about it. So, so we're going to want to look at their guidance. So, here we go. Annual project sales and gigawatt peak. So for 2021, their actual numbers reported 2.1 gigawatt peak, and their expected sales for next year, or this year, 2.1 to 2.6 gigawatt peak. And then for 2023, 2.8 to 3.3, and so on and so forth. Operational projects. Here we have 2.1 gigawatts operational, and after we add just about the same amount, they're going to take the median or the mean of these numbers here, and they're going to add it there. So we're 4.3, more than double the operational, and this is operate and maintain projects. So this is Canadian Solar building out solar projects like solar power plants and operating them, maintaining them, and selling the electricity to the customer, which is most likely a utility company or pretty much utility. So that's going to double next year and then increase by 50% the following year, and then so on and so forth. You can see that projection. Net cumulative projects retained and megawatt peak 292, and then 370 next year, and double that the following year. Alright, backlog projects are large stage projects that have passed their risk cliff date and expected to be built in the next 1 to 4 years. Okay, so that's the backlog, which they give us here a project pipeline, but no backlogs. So pipeline projects are early to mid-stage project opportunities currently under development that are yet to be de-risked. So they're just opportunities, no guarantee, no contracts here. But they do give us a backlog. Okay, great. So they are currently constructing 262 megawatt peak North America, 841 in Latin America, 174 Japan, 345 in Asia. And as it stated, never mind, hold on. That's just their construction. So that should take, they could finish this year, they could finish the following year, but then the backlog, minimum 1 year, maximum of 4 years. So quite a bit of volume coming for Latin America. They're going to more than double in North America. They're going to start, begin constructing in Europe at least next year, maybe into the future, and then continue in Japan, kind of drop off in Japan and Asia. And but they do have quite a few projects lined up for China. And then here the pipeline numbers. This is the opportunity. So there's no way they could complete these projects here. those are just opportunities. And as I say, they're going to de-risk them. Maybe they're in a very remote location, not a lot of shipping ports they can get to. Maybe the labor force in that area not too skilled in, framing or concrete, or maybe one area is prone to natural disasters, or maybe some areas that are, just opportunities right now. Maybe they don't receive optimal sunlight. Who knows? They have a team that'll go through, de-risk. Okay, we like projects A, D, and F, but we do not like B, C, D. You get it. And here we go. So, global energy storage project development and construction. That's 2.7 gigawatt hours that are in construction in North America right now. And we saw earlier that they had completed 890 megawatt hours in 2021. They had 0 in 2020. But now they have, almost triple what they did last year in construction, currently in construction. And the backlog they have so far, 465 megawatt hours in Latin America, 56 in Europe, 30 in China, 20 in Asia. And the pipeline, they still have to de-risk these. So a huge demand for battery storage in North America, and huge demand in Latin America, Europe, huge demand in Asia. So that's great news. They just started this up, and it may not be too profitable right now in the short term, but once they get that down, solidify their supply chains, that should be pretty big source of income. But like I was saying earlier, they'll be able to sell their power, longer periods during the night, or when weather is not optimal. And then here's their solar power plants in operation and megawatt peak for Latin America: 316 megawatt peak, 31 Japan, and total 445 megawatt peak. And let's see. For the foreseeable future, manufacturing capability looks like they are focusing on module production short term. And by the end of this year, they should double ingot production, increase wafer cell production, and ultimately increase their module production. And that's pretty much it. We could go through the specifics, specific financials, but we pretty much got a pretty good overview from the first 2 pages. Let's see. Here we go. For the first quarter of 2022, the company expects total module shipments to be in the range of 3.6 gigawatts to 3.8 gigawatts. And they're going to cannibalize 210 megawatts of their own modules for those projects, those operate and maintain projects that we love. And their revenue should be 1.25 billion to 1.35 billion, which is going to be a decrease from what we saw earlier. I believe last quarter was 1.5 or so billion. And then the gross margin 14.5 to 15.5 for the first quarter that we're just about to end here in April. And the gross margin for this quarter that we're reading, it was like 19.7. So it's going to be a decrease there. For the full year 2022, total shipments should be 20 to 22 gigawatts. increasing outlook for total battery storage shipments in the range of 1.8 to 1.9 gigawatt hours, which would be pretty much a doubling from what they did last quarter. And they increased that from their previous guidance, which is good. They're doing a lot better than they expected in terms of battery storage. Total project sales of 2.1 to 2.6, which they revised down from 2.4 to 2.9. And the company is increasing its expectation for total revenue to be 7 billion to 7.5, which was originally 6.5 to 7 billion. So that's good news. It looks like maybe more revenue from the battery side, since they're not going to be shipping as many panels as they thought. And then the CEO will say, first quarter margins impacted by uptake in material costs. Shipping costs are going to remain elevated, but they are expecting them to normalize with the improvement in the global pandemic situation later in the year. And they're focusing on profitable revenue growth and shareholder value. And they will continue to invest in technology, upstream capability. Which reminds me, I would like to take a look at their financials. Where do they detail? I'd like to see them detail out their research and development. So let's see, where is it? Here we go. Research and development expenses. So for the 3 months ended this third quarter 2021, right here, third quarter 2021, 13, what is this, in thousands of US dollars, so 13 million? Yeah, 13 million. They spent 13 million on research and development in the third quarter. They spent 19 million in research and development in the fourth quarter, so they are increasing. And then here's Q2. No, that is fourth quarter 2020. So they've almost doubled how much they're spending on research and development year over year. And then for the entire year, 58 million, and then for the full year 2020, 45 million. So people be upset that they missed their net income, and revenue was very close to what they had guided for, but they did miss their net income. And there are other solar companies that are more profitable, but I mean, I would prefer them to continue their research and development. And as you see, they're starting to penetrate the battery storage sector, which increases the profitability of their operate and maintain solar projects. And so I prefer their profits go there instead of just going straight to their cash position, which due to inflation would be worth less and less over time. So I've been investing in this company for a while now, probably 2018 or so, which I think is like a 100% gain in the stock price since then. But for the last 2 years or so, it's been flat, if not maybe a loss. But that's just short term, Gas prices are going up, which should, push more people towards this direction. And with the battery market penetration, would make a solar system more reliable, and then could be paired with other things to make it even more reliable, such as wind or nuclear. So yeah, they're looking good. The business is strong. The business, they have more cash. Let's see. Where is their... I'd like to see how much cash they have. Cash and debt. Let me see. No, it's going to be down further. Yeah, here we go. So as of this quarter, Q4 2021, cash and cash equivalents, they have just about $1 billion. And okay, just about $1 billion in cash and cash equivalents. And their liabilities, I want to see their debt. Let me see. Ooh, there may not be just a. This is all of their liabilities, but I'd like to see their straight debt. I don't think it'll give us a solid number. So no, I don't think so. Could compare assets to liabilities, but well, anyway, that info will get calculated for us a little bit later. But last I checked, they had more cash than debt. So the company is very stable, going in the right direction, expanding their horizons, and maybe short term, they're going to miss expectations, and they're putting a lot of their excess income into research and development, which could go to the bottom line and increase that earnings per share number, and people would flood into the stock if they were, you could see the exponential S curve of the stock price, but in the long term, that kind of stuff gets snuffed out and gets recalibrated. They lose their market position due to stagnation. So it's better for them to just reinvest that money into the company instead of recognizing it for shareholders. But that's about it. Thanks.